Hi everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we are diving into a report from Movano Inc. Will this report make us feel like dancing, or will it leave us feeling like we just stubbed our toe? Let's find out. This company is in a bit of a tricky situation with Nasdaq and could be at risk of being delisted from the stock exchange. We'll talk about what that means and what the company is planning to do about it. Before we dive in, if you appreciate getting straight insights from corporate filings, make sure you're subscribed. We also have a Discord community linked in the description below. Scroll item 3.01. Notice of delisting or failure to satisfy. A continued listing rule or standard. Transfer of list to SIR. Okay, let's jump right into the heart of the matter. The company received a notice from Nasdaq. It's basically a warning letter saying that they are not meeting some of Nasdaq's rules or standards. Specifically, there are two problems. The stock price has been too low for too long and they didn't file a financial report on time. The first issue is that the company's stock price has been hanging out below $1 for 30 days in a row. Nasdaq requires companies to maintain a minimum bid price, which is essentially the price people are willing to pay for a share of stock to stay listed. So for a month, the share price was less than $1. Scroll pursuant to Listing Rule 58E110 C3A, if the GL company is not eligible for any compliance period specified through. Usually companies get a grace period to fix this, but Movano isn't eligible for one because they did a reverse stock split in the past year. A reverse stock split is when a company reduces the number of its outstanding shares, which increases the price of each remaining share. It's like having a pizza and cutting each toast in half to make more slices, but you still have the same amount of pizza. Because they already tried this tactic, Nasdaq isn't cutting them any slack this time. The other issue is that the company was late in filing its financial report for the first quarter of the year. Companies are expected to file these reports on time so investors can stay informed. Because of these two issues, Nasdaq is planning to suspend the company's stock from trading around the middle of July. They will also file paperwork to remove Movano's stock from being listed on the exchange. Being delisted means its shares can't be bought and sold on Nasdaq anymore. But the company is not giving up. They plan to appeal, which basically means they will ask Nasdaq to reconsider. The company has until the middle of July to make this appeal. Movano can ask for extra time before any actions are taken, meaning no suspension of stock. They are planning to ask for an extension. Nasdaq will then decide if it will grant them that extra time. Scroll item 7.01 Regulation SUFD Disclosure Scroll. Let's switch gears slightly to look at another section. This part refers back to the notice we just discussed and also mentions the company made a press release regarding this situation. There is some details which basically means that while they are sharing certain information, it's not officially filed in the same way as other parts of the report. Now let's address a very important part of the report. Forward-looking statements. This is basically the company telling us what could go wrong. It's them acknowledging the risks. One big one is their ability to get their stock price back up and file reports on time to comply with Nasdaq requirements. If they fail, they risk being delisted. Scroll Nasdaq requirements for any such relief or extension. And risks related to the substantial cost crawl. Another risk is the amount of money and effort it will take to deal with these issues. Fixing these problems will cost money and it will take time and focus away from other important things. The scariest risk they identify is that would make it much harder to raise money and seriously hurt the company's finances and operations. Nobody wants to be delisted. Right, okay, so what does this all mean? Well, what I see is a company in a tough spot. Their stock has been underperforming, which led to the initial warning. Then, to add insult to injury, they missed a financial reporting deadline. To me, it seems like management may have bitten off way more than they can chew, and it might be time for them to start thinking about simplification. This is never a good look to investors. The company has a plan to appeal and ask for more time, which is a good first step and probably the only option they have. But there is no guarantee Nasdaq will agree. The appeal may work, but it still doesn't excuse their previous actions and inactions. What makes this situation even more concerning is the company highlighting how bad it would be if they were delisted. It could really hurt their ability to get funding and run their business. That, to me, shows the CEO is either not competent or is setting very low expectations so that if they don't get delisted, they will be looked at as genius. Overall, I'd say Movano's immediate future is uncertain. They need to convince Nasdaq they can get back on track and quickly, or they are in big trouble. Alright, that's our breakdown of Movano's recent SEC filing. What's your take on Movano, and do you think the company will succeed in their appeal with Nasdaq? Share your thoughts in the comments below. If you found this analysis helpful, hitting the like button really does help, and definitely subscribe for more corporate deep dives. Before you go, don't forget to check out the Discord in the description. Thanks for watching.